This is going to be a quick intro to MACD and how to use it. So let's just dive right into it. We'll do a PowerPoint or a little PowerPoint presentation here, and then I'll show you some examples of how MACD can be used in your day-to-day trading. So let's begin. So MACD, a how-to on MACD. What is MACD? MACD is short for the moving average convergence divergence. It's like a compass that helps you understand two important things. One, which direction the market is moving, in this case, trend, and the other one is how strong that that movement is, which is also known as momentum, right? There are three parts of MACD, and these are the most basic explanations that you can have in order for you to understand what they are. Number one, you have the MACD line, which is a blue line. This is what's known as the fast line, right? You got to remember, there's always going to be two lines. You're going to have an orange and a blue line. So think of the MACD line always as your fast moving line. It shows a difference between two moving averages, okay? And it helps identify quick market changes. We'll show you an example of what that is later on. Number two, you have the signal line, which is always orange. And this is known as the slow line. And this helps confirm if a trend is real. So when MACD crosses the signal line, this could be an indication for you to take a trade. Number three, you have a histogram. The histogram, it actually shows the distance between the MACD and the signal line. It shows the actual bars of the length of space between both signals, right? The bigger the bars are, the stronger the momentum, and the smaller the bars are, the weaker the momentum is. I always like to say that you can compare MACD to an EMA or an SMA moving average crossover, right? But there's more to it. So let's just think of MACD for the moment for what it is, which is a line, a moving average that's crossing a signal that's giving you a directional idea of which way trend is going and at what velocity. How MACD works. Once again, think of MACD like watching waves at the beach, right? And I use the waves example because I live on the beach. The MACD line is like watching big waves. And the signal line is like watching the overall patterns of the wave, right? So think about it. You got one big wave that comes, and then you have a couple of small ones, and then you have a big wave that comes. Think of it like that. And when these waves cross each other, something interesting might happen. Remember, MACD is a lagging indicator, so it's not going to give you 100% confirmation on if the trend of the trade is there, but it will help you it will help you identify it in case there is a trend and you need an additional type of oscillator tool that can guide you in the right direction. Trade signals to watch for. Okay. As always, you always have to look at MACD as a tool that helps you, and you always have to put it side by side with price action. And one of the things that MACD allows you to identify is something known as divergence, which is a topic that we can get into later on. But here are two types of signals that you have to watch for when you're trading MACD. You have the bullish potential buy, right, which is a bullish signal. And that is when the MACD line crosses the signal line and the MACD line crosses above zero. Then the MACD has higher lows while price makes lower lows. That's known as bullish divergence. Okay? Then you have a bearish potential sell signal, which is the complete opposite, which is when the MACD crosses below signal and then the MACD line crosses below zero, And then you have the MACD that makes lower highs while price makes higher highs. This is known as a bearish divergence. Again, we'll get to that later. Here are some tips for beginners. Number one, don't trade MACD signals alone. Use it with other tools. Remember, it's a lagging indicator. Number two, the bigger the histogram bars are, the stronger the momentum. And I'll show you an example later. Number three, look for divergences. They often signal strong moves. One of the styles of tradings that we like to do is trading divergences. So MACD will help you recognize divergences. And number four, practice spotting patterns on historical charts first before you dive into MACD. Because if you don't truly understand the dynamic of how it functions, you will get psyched out with false signals and you will ultimately end up hating it. Real world example. Imagine pushing a cart. So the MACD line, the best example that I can give you of what it is the speed at which you're currently moving. Okay? So the MACD, which is known as the fast line in this case, is the velocity that you are currently moving at in the market. And then the signal line is the average speed, right? So you got to remember, you could be moving faster than the average speed, but if you calculate the amount of cars that pass by, et cetera, the average speed you'll get a number that's the average speed, right? So you are the car, and then you have the signal, and the momentum line is moving fast, and the signal is giving you the average speed, which will then be shown in the histogram, the distance between the average speed and the momentum line, right? And that's exactly what the histogram shows, as per point number 3. The histogram shows if you're speeding up or slowing down. Okay? Important reminders. And this is very important. MACD sucks in sideways markets. It's horrible. So don't even bother trying it. But it works best in trending markets. It's always combine it with other analysis. Use it to confirm trends, not to predict them. And most importantly, practice makes perfect. What are some of the common mistakes to avoid with MACD? Trading every crossover, known as false signals. I cannot tell you how many times I've heard people say, oh, I'm trading the MACD crossover and then the market dumped. Remember, every indicator out there, other than recognizing price action, is a lagging indicator. So you have to make sure that you know what you're doing so you don't get caught in the false signals. You ignore the overall market trend. So if the overall market trend is bullish and you have a MACD cross to the downside on a smaller time frame, that doesn't mean that the market is automatically going to go bearish. If the bigger trend is bullish, you stick with the trend. Remember, the trend is your friend. And number 3, the common mistakes to avoid is not waiting for confirmation. Trading too quickly on the signals. Similar to EMA or SMA crossovers, you'll see that a lot of people say, oh, the 9 crossed the 21, or the 8 crossed the 21, or the 8 crossed the 14 and the 21 on the 5. And suddenly everybody thinks that the market's going to rally. That's not the case, because it's very important to look at the bigger time frames so that you understand the bigger dynamic of what it is that's happening in the market. Best practices. Start with the daily chart until you understand patterns. And I'm going to show you some daily charts so that you can see how you're able to recognize that price is indicating that there's a potential upside and that MACD is signaling that there is let's just say, a change of trend to the upside or to the downside. Keep a trading journal on MACD signals you spot. I like to trade MACD on daily signals. I don't like to use them in intraday signals. And I use it as confluence with other indicators that I use. So I don't necessarily keep a journal, but I would suggest that you keep one so that you can understand what time frame you prefer to use MACD when you start using it, if you decide to use it. Practice identifying divergences. We cannot stress this enough. Trading divergences are some of the most lucrative trades that you'll ever take. And MACD, similar to RSI, helps you identify these divergences. Most importantly, always use stop losses with your trades. Always. Remember, no matter what indicator you're using, you need to have a game plan. You need to have a take profit, and you need to have a stop loss. One of my mentors has always told me, if you take a trade and you take it at 54 and your price target is 76, you let it go to 76, and then when it hits that price target, you sell and you turn off the screen and you go to another stock. Why? Because you don't care what happens after 76, because your price target was 76 and your trade was a 76. If it breaks down below, if you took it at 54 and it breaks down below 48, because that was your, if it hit that, it was going to die on you, then whatever. If it bounced off 48, get another trade, but have a plan. And most importantly, be patient. Good setups take time to develop. One of the biggest problems that you'll see is people are very eager to get into a trade. They're jonesing to get into an opening range breakout trade. They want to trade the first 30 minutes. They want to trade the first hour. Sometimes you have to sit in front of the computer all day to just catch one trade and maybe make $300. Maybe you made 1,000. Maybe you only made 75. But if you sat there all day and your signal came and you took your trade and you executed and you were waiting patiently for your signal to be given, then you're already 10 steps ahead of the game, because the biggest problem that most traders have is that they're eager to get into something. So now that I've finished explaining the overall basics of MACD, I'm going to go ahead and if anybody has any questions, if they can please type it out in the main chat as opposed to the live sessions. If there's anything that they want me to scroll up to so they can take a screenshot right now, even though this is being recorded, please let me know.
No, it's okay, JP. I think you should just move on to the whole chart thing, because then people would have a lot more better questions.
And
Sorry. JP, I was saying, you actually should just go to the chart, because once you explain things, I think that will also clear up some questions, and then people could give
I'm
better
just saying,
questions.
just in case anyone wants to take a screenshot of this or anything, just feel free to let me know. But again, this is being recorded, so you guys can watch it later. So I'm going to go ahead and close this out. And I am going to bring over my charts. So let's go ahead and use an example of MACD. So here's MACD.
Wait,
As you can see,
JP, I'm so sorry. Would you actually mind removing it from your screen and then adding it on again?
Sure. Let me go ahead and take this off and take this off. So how do you add MACD? Come over here, you click on indicators, and you type MACD. And you're going to click on moving average, convergence, divergence. That's it. Everything is going to remain the same. All the settings are the same. There's nothing that's changing. You keep this exactly how it is. If you want to change the colors, feel free, but I wouldn't touch it. I'm just used to looking at it like that, so keep it like that. So let's understand what MACD is. So as you can see, we have a fast length, which is over here, the 12. You have a slow length, which is the 26, and you have a smoothing signal, which is the 9. You'll see how all of this plays out over here in a minute. But these are the default settings, and nothing needs to be changed. So let's dive right into it. MACD is a fantastic indicator for identifying a reversal of trend and a potential move to the upside or to the downside. So, what MACD allows you to do is to understand if the price action of the underlying has any continuation to it. So, one of the things that you do when you're looking at whatever the underlying is, in this case Nvidia, is when you open up the MACD, you want to see on the daily if number one, you had bullish price action, and if that bullish price action is being confirmed with a MACD cross signal. So as you can see here, we were anticipating that MACD was going to cross signal on Nvidia, but we were not going to take this trade until we got confirmation on this, which is known as the MACD signal cross. Now, granted, a lot of people would say, hey, you're taking MACD, you're taking a MACD cross on the daily, but it's below the zero line. Okay, that is fine if you have a proper exit strategy in case the continuation pattern of an upward movement on the underline, right, does not continue. But for example, today we saw bullish price action on Nvidia, right? We could see that. I don't know why the volume is not here for some reason, so I apologize. I'll get to that later. We can clearly see that we've been having a thrust to the upside on price action on Nvidia. And today was the day that we had a bullish crossover on the MACD. So what is that signaling? That is signaling to traders that there is a potential that price could try to come up here and fill that space. What is MACD telling you? It's telling you that there's confirmation on the movement of price and bullish trend. Does that make any sense? Does anyone have any questions? If they don't, I'm going to continue. So people will always say here, well, this histogram that's here, what does this mean? What are these colors? Well, it's very simple. For example, here we saw that there was a bearish MACD cross, right? You can see it here. And here, these bars are showing you the momentum and the distance between the MACD and signal and how strong it is. Obviously, the bigger the bar, the stronger the move to the downside is, and the wider the space is. And you can tell as the colors start to change from heavy red to light pink, the distance between MACD and signal is getting closer. This means that the sell-off downward pressure is slowing down. And now the buyers are stepping in, which is creating the momentum to the upside. And once it flips green, you know that the buyers are in control. Does anybody have any questions?
No, JP, leave questions till the end.
Okay.
You're doing a pretty good job explaining.
All right. So now that we've looked at the daily chart, let's start taking examples. Let's start looking at examples on the smaller time frames of how it is that we would look at this trade. So we already know that we have a bullish cross on the MACD, right? It was executed today. Well, let's go look at today's price action on Nvidia. Let's go to the 130-minute chart. So absolutely, we can see that MACD, we held a level that we had, MACD flipped bullish, and it continued pushing up and up and up and up until it stalled out. That's on the 2-hour. Let's go to the 65-minute. We see the same thing. MACD flipped bullish. It pushed price up all the way to 133. Now it's stalling out a bit. Let's come back down a little bit to another time frame, 30 minutes. Now we're seeing that on the smaller time frames, NVIDIA wants to push down just a bit. Because what is MACD trying to do? It's trying to reset on the smaller time frames. Now, we don't need to go past the 30 minutes because these smaller time frames become irrelevant. Because remember, MACD's full purpose is to be used on a bigger time frame. But if we're looking at it on a 30-minute chart and we're sitting here and we're studying it, we're saying, okay, it looks like NVIDIA is going to come back down a little bit. However, we do have a bullish cross on the daily. So what does that mean? That means that you already know that on the daily, we're gonna have bulls be in control. But primarily, your main thing right now is to look at the smaller time frames and wait for MACD to reset so that when we have a continuation pattern on NVIDIA, it does that full move and tries to go for that 153 which is what we would all hope, right? Remember, when you never have straight moves that go like this, right? You never have straight to the up. You always have retests. We always have price action come back down and then, mess around here and then try to make a move, right? That's what you hope for if you're bullish. So that's what we're looking at here with MACD. We're looking at MACD on the daily, and we know that the trend has flipped bullish on the daily, but on the smaller time frames, there is a probability that we're going to push back down just a little bit. That doesn't negate the fact that on the daily, we do have a bit of a bullish setup. Now, excuse me. You can also see that a lot of times MACD will give you some false signals. For example, let me try to find something on the daily. Here's a perfect example. Here is an example of MACD trading in without even looking at the chart, would be a weird market that's just going up and down, up and down, up and down. And if you were bearish, right, you would probably have a nice little trade here, but it's not the full extreme of a MACD breakout like there is here, right? So let's look at where price action was on NVIDIA when MACD was trading there. Well, can't make that stuff up, right? It was trading in this area. It's just going up and down, up and down, up and down, up and down. Yeah, granted, this was in November 2023, but you can see how just MACD was just kind of just not knowing what to do. But when did it actually make its real move? When price action broke out and MACD showed you proof that the continuation was there. And no way, shape, or form was this breakdown here bearish, because the overall trend is still bullish. Okay, well, let's keep looking at how you would use MACD in this case, right? So you're not going to just use MACD by itself. You want to have other types of confirmations, right? So you might want to throw on an RSI. There's many traders that like to use this what I call the RSI MACD signal cross, right? And this is a perfect example of how you can use two separate momentum oscillators for confirmation on a trade. So RSI has a tendency to signal faster than MACD. So as you can tell here on Wednesday, February 5th, MACD showed a bullish crossover. But notice that, RSI showed a bullish crossover, but MACD didn't. MACD still needed time to catch up. But guess what? Now MACD is showing you a bullish cross. So what do we know? We know that RSI has signaled along on NVIDIA, and we know that MACD has signaled along on NVIDIA. So now you have two confluences outside of today's price action that show you that the trend of the particular underline is showing momentum to the upside. Of course, you can use other things. You can use, for example, you can use your daily SMAs. Well, remember, everything is always connected in some shape or form. So, how did you know that Nvidia was going to be bullish? Well, guess what? Nvidia broke and closed above the 200-day SMA. This is the daily, which happened to be right around the same time that RSI broke and close above signal. What happened with Nvidia? Nvidia broke and closed above the 10-day SMA, and it continued moving upward. And guess what? Right when MACD turned bullish, it broke and closed above the 20-day SMA. So now you have daily SMAs on top of an RSI confirmation and a MACD cross that's showing you what? That the underlying has momentum to the east. This is the best example of how MACD gives you the opportunity to recognize and spot that there are buyers on the market, in the market. Does anybody have any questions? Because that's going to be my summary right now for MACD.
JP, before we get in, so you showed a good example of Nvidia and basically looking at it in a larger trend, and then swing trades. Obviously, majority of people, not majority, but a lot of people do day trade. So can you give? Let's go to another stock than Nvidia, and then could you give an example of how you personally would use this day trading? I know a lot of people like trading SPY, for example, and they used trade SPY in the past. So if you don't mind giving an example on SPY, and then maybe whichever stock you would prefer.
So here's the thing. SPY, for example, it's an ETF that's very volatile and moves up and down, similar to Nvidia. But one of the things that you have to be very careful with when you trade, when you use MACD for day trading, is that it's going to give you a lot of false signals. I don't like using MACD to take intraday trades. I like using MACD to spot swing trades when you have an underline that's been overextended either on the oversold or the overbought. I personally do not recommend you using MACD for day trades because it's just going to chop you in and out, in and out, in and out, in and out. Similar to EMA crossovers. If you don't know what you're doing with EMA crossovers or any type of moving average crossovers, MACD is going to drive you nuts because you're going to sit here and you're just going to watch this do this all day, right? Go up and down, up and down, up and down, up and down. And you could be in a position where the market, all it does, it just trades like this. You see, it could just trade like this, and then MACD's, sideways pretty much, right? And then just MACD goes up, doesn't do much. You go long, and then it rejects, and then it goes up. So I personally do not suggest or bother using MACD for any day trading. So therefore, I cannot give you an example because I'd be misleading you in telling you to use it. It's a bigger trend indicator for a bigger time frame.
Sounds good. Let me go to some of the questions you had earlier. And you guys could put in either chat. I'll look at either of them. Someone asked in the main chat, there are two different colors on the histogram for MACD. I'm looking at them. What do they mean? I'm pretty sure you already went over it, but if you could just say like a 1-minute explanation for each one.
So long story short, all you got to think about is these histograms are showing the distance between signal and the MACD and the signal, right? And how strong the momentum is. That's all it is. Obviously, the heavier the green, the stronger the move. The weaker green, it's slowing down. Same thing with the red. The stronger the red, the more pressure to the downside. The weaker, the red, or in this case pink, means that the sell-off pressure is slowing down. But for example, here's a perfect example. If you would have taken this trade off MACD on a 5-minute crossover, right? You would have taken shorts, and then you just would have been here watching this do this, and you would have just sat there thinking, oh my god, it's going to keep going down, it has to go down, and then it just bounces back up. It's not an accurate healthy indicator to use on a smaller time frame. Now, on a bigger time frames, it'll start giving you a lot of great opportunities. But you always got to remember, everything that you're using is lagging. So you have to use different confluences to make sure that the trade is going to be executed correctly.
So you got another question. Somebody asked, what does MACD positive cross over below the zero line mean? I'm pretty sure that's a simple answer you can give.
I'm so sorry. I don't understand what you said.
I'm guessing the zero line, like you see on the MACD, there's numbers all the way on the right hand side.
Yeah. So think of the zero line as midpoint. That's all you got to treat it like. Think of it as midpoint. Once you cross over the mid, right? Because this is going to be your range. Once you cross over the mid, it's telling you that we have exited from well, let's just use this language is not correct, but just to simplify it, once you get above zero, you can think of it as we've exited the oversold area. Does that make sense?
Yeah, yeah. So, okay, so while people type up the rest of the questions if they have any, because I mean, you did pretty well explaining it, you could go back and show other examples of stocks on, like, let's say the 2 hour, daily, 4 hour, whatever you want to show us, like how they can go through a watch list and figure out potential like trades based on looking
Sure.
at price action
So
in the
let me go
MACD.
ahead and do that. So I'm going to go ahead and use my most traded watch list. And this is an example of how I look for swings, right? So when I'm looking with MACD, I'll just go like this. I'll have this open like this, and I'll start looking. I don't know why Delta's not loading now. It's going to tell me how much Delta be. Okay. Oh God, that looks horrible. But we're giving bullish examples, right? So let's not look for bearish examples right now. Even though Delta looks like it's going to die. By the way, it's going to come all the way down to 61. But let's look for a bullish example. So I'll go through my watch list and I'll keep an eye on MACD, which is on the bottom, and I'm starting to look for upward crosses or potential upward crosses. So DJT, we're not going to touch because I mean it's DJT, right? We don't know what it does. Um, let's try to find something that you would want to add on your watch list. And we're not going to look at Riot either. Right now, I'm not finding anything that could potentially be bullish. Okay, here's something to watch. General Dynamics. General Dynamics is starting to make this curl on the MACD. It's something that I'm going to put on watch because I want to see if we can potentially have a MACD cross. You can see that we had a MACD cross here on the daily, but look at how price never truly broke out. It just chopped around. What I want to see now that the MACD is pushing upward and trying to get above zero, see if we can cross and MACD can break above signal and cross the zero line and try to push General Dynamics up into this 270 range. So this is something that I'm going to watch because I can already see MACD curling. That's a perfect example. Let's continue going down the watch list. Again, we're just looking for bullish setups right now. And we're looking for bullish setups that are exaggerated, right? That they're below the zero line, that have the potential to really make a move to the upside. So PayPal maybe something to watch because we're seeing that the histogram is slowing down. We're seeing that MACD is not yet turning, but if this histogram, the distance between MACD and signal, right, starts to get tighter, and we can start to see um, a MACD line try to cross back around zero, we can maybe eventually get some type of indication that PayPal is going to want to try to push to the upside. It's not ready, but something to watch. Let's continue. Let's see if we find one more bullish setup. I don't even want to look at NextEra Energy. It's a mistress that I don't ever want to date again.
You know, the
Um,
funny thing is, JP, I was actually looking at Nextdoor for calls
yeah,
in your close.
I know. I just
Yeah.
boom. This is my golden setup right here. This is a perfect example of a potential long that can do wonders for you. So what's been happening with stupid XOM? It's been having a hard time getting above this 110, 112 range. And if you notice, we've chopped from here to here to here to here. It's great for options, but you really want to catch a big move here, right? You want to catch a potential move all the way up to above the 115 mark, which is the 200-day simple moving average on the daily. But I'm going to be careful to not take this trade, even though MACD is signaling me, because we do have their dividends paying out. And whenever, if anybody knows anything about XOM, whenever they pay out their dividend, the stock has a tendency to come down. But I'm going to be watching this because MACD, as you can tell, is above signal, and you can see that it's trying to get above the zero line, right? So, and what else do we see? We see that XOM broke and closed above the 10-day SMA, broke and closed above the 20-day, and it broke and closed above the 50. When we break and close above the 50 on any stock, it's showing a potential reversal to bullish trend. Obviously, when we break the 200, that's a full bullish trend reversal. But now we're getting signal that hey, XOM is starting to look sexy. She wants to go dancing, and I want to take her out. So I'm gonna wait till after we collect dividend, which is on Wednesday the 12th. The stock will probably come back down to test somewhere around this 108, 109 area. I'm going to keep an eye on MACD, see if it crosses above the zero line. And at that point, I would look at taking longs, maybe the 115s or even further out to the 120s. Now let's use some more confluence. Let's turn on the RSI and let's see if the RSI gave a signal. This is beautiful. How did I not take it? Okay. So here's another example of confluence. RSI flip bullish. We already knew that, because we also had a bullish signal here when we broke and closed above the 10. We had to be a little bit careful because we had the 20 blocking us. But today, with this price action and RSI indicating you that there's strength in the move, and MACD almost bouncing off signal, you now have one, two, three confluences that are showing you that XOM has the potential to push up. But we're smart. We're not going to be silly goose JP and take it going into dividend, because what do we know from historical data? We know that every time they pay dividend, it has a tendency to tick down. So we put this on our watch list. That's a free trade for everyone.
Hey,
This
JP.
these
Oh,
are my these are my golden signals.
so I'm gonna ask you. People ask questions, and I'm gonna get to them. But I'm gonna ask you a question that I eventually answered myself. But around like 8 years or 9 years ago, sorry, that's my dog who's spoiled. But about 8 or 9 years ago, I remember when I was first reading up on all the indicators, because I've learned about almost all of them. One thing I always tried to figure out, or I had difficulty at first, was figuring out the main difference between the RSI and the MACD, right? And maybe it's simple to others, but what's the main difference, or what does the RSI give that the MACD doesn't give, and what does the MACD give that the RSI doesn't give?
I would say that a lot of people say that they're very similar. Um, I I believe that well, I don't believe, I know RSI is much quicker at identifying trend. But with that being said, RSI will break and close above, and then you'll have a tendency to have a pullback, right? And people will be like, "Oh my God, my trade is invalidated. Oh, I'm down 20-30%." That's when MACD comes into play. MACD to me is the confirmation that I need, that tells me that MACD that RSI is going in the right direction. What's the biggest difference? It's two completely different tools, right? One is the MACD obviously is a moving average convergence divergence. The RSI is a relative strength index. The RSI is showing you the strength of the move. The MACD is literally telling you that the moving averages are showing directional trend.
Gotcha. That's pretty good. So, all right, I'm gonna ask a few of the questions that you were asked. How do we get to the okay? So this is actually a pretty good question because you said that day trades, you don't want to use it for the MACD. You were looking at the 5 minute. So now the next question is, what if you use day trades using, let's say, the 30-minute chart or the hourly? If you could go, like, for example, back onto SPY and show us if
Well,
it's
let's
valid or
avoid
not
SPY
valid.
because SPY is such a volatile thing that it doesn't it's not a great example to use, right? I
You
can do it, but
you don't need to do it, but at least use a stock that more people trade day trade options on. So maybe like Apple,
sure.
Meta,
So let me see. What would
Microsoft,
be an example of something that people day trade options on other than SPY and QQQ?
Nvidia,
Um,
maybe. I don't know.
wait, wait, let's do Apple.
Okay.
Okay. So today, today on the 30-minute time frame, if you were looking at MACD or if you were using RSI and you were just taking trades based off of this, you might have gone to today being bullish, right? Assume that you don't have these things up here. And then you would have said, oh, yeah, but look, MACD flipped bullish on the 30-minute. It has to be long. But guess what? It kept trending down. Apple kept pushing down. And look at how steady MACD remained. You can tell that it didn't do much because it remained within the parameters of these numbers. See? Even though price was pushing down, MACD wasn't doing anything. So if you would have taken it long, if you would have gone long off a MACD signal here, you would have been crucified if you would have taken longs just off of this. So once again, yes, you can use it on a smaller time frames. Yes, you can use it on a 30, but again, what's the overall trend of uh, of uh, of Apple? It's bearish. So MACD is not showing you on a daily chart, nor is price action showing in a daily chart that at any given point, this 30-minute signal was valid. Perfect example of how MACD will fake you out. So if you were looking at the bigger time frames, you would know to not be trying to go bullish. But if you were looking at the smaller time frame for a day trade, boom, you would have gotten faked out. And you would have taken a red trade and you would have been in the red. Again, I cannot emphasize enough. MACD works best on larger time frames. The bigger the time frame, the more accurate it's going to be. I do not suggest using it on smaller time frames or as something to take day trades. It's a swing trade tool. Please keep that in mind.
Wait,
By the way, Apple looks like it's going to die.
uh, the funny thing is actually if you go to 30-minute, I don't know if you guys would call me stupid for this, but I kind of wanted Apple calls because if you see the previous close when it came to it, it bounced off that level and the candle print was almost the same exact one. So I thought, hey, patterns almost repeat. So I thought maybe that might be at least like one gap up before Apple comes back down. But I definitely see the bigger bearish trend. That's definitely for sure.
I mean, and it's even funnier because, I mean, look at that monthly. Look at the monthly MACD just telling you that it has no juice,
So then,
right?
how about like this? If you're saying, because we don't suggest anything, we're not financial advisors, but like, um, if you're saying like, let's say in your experience, day trading with MACD is not great, maybe is one way you can use it is looking at bigger time frames such as the daily, 4 hour, and 2 hour to get a gauge on the sentiment by then looking at
All it
MACD
is.
and then
Exactly.
finding the
It's a,
day trades that set up with the sentiment. So like for example, you point out Apple, which is a good example because the MACD is very bearish. So then you could potentially use that as when you go into a day thinking, all right, daily's pretty bearish, monthly's pretty bearish. Maybe the setup I want to look for is the put setups, and then those are the ones that have a bigger chance of working out, I guess.
which is why I cannot put emphasis enough on that. If you're going to day trade, you have to understand true price action and level two reading and time and sales, or for that matter, understand how to read candles and recognize full chart patterns in its extremity: bull flags, bear flags, falling wedges, rising wedges, megaphones, descending triangles, symmetrical triangles, rectangles. If you're going to day trade, you got to go into the game, knowing that you're trading against the smartest people in the world. Okay? The smartest people in the world. So, I hate to say it, but none of us here have that competency level, nor do we have the tools that they have. So why get yourself chopped up trying to trade the Qs or the SPY on a day trade just to make a couple $100 when you can find a trade that MACD is signaling to you, and RSI and all the other confluences, that the bigger trend, which the trend is your friend, is bearish? Take a contract that's 45 days out that you're not going to bleed out on theta. Instead of being the dork that's trading zero DTEs and then gets chopped up 50%, you close a trade and then it reverses on you and you hate yourself. Why do that to yourself? So if you start trading swings and you start looking at MACD in combination with other tools, you'll start to say to yourself, hey man, you know what? I don't have to work so hard, right? So that I can make little money and be stressed out. Now I can work less and execute better and not be stressed out, right? So that's why I say don't use MACD because it's for day trades, because it's going to chop you up and you're going to go nuts, right? Use it for the bigger momentum swings or for the bigger trend trade. It's bigger time frames will alleviate two things. Number one, anxiety, which we all suffer as traders, and nobody can say that they don't. And number two, the constant doubt. Because one of the things that people fail at when they trade is execution. So give yourself the ability to perform and execute to the best of your ability. Not by, and if that's bigger time frames, so be it. And maybe if you like to trade smaller time frames and you're a beast at that, God bless you. But the majority of people aren't. So for those of you that aren't, use these tools and alleviate the pain of being upside down 80%, and then you close your eyes and you close a position and then it's up 160.
Yeah, no, absolutely, man. Tying into actually all of this, one other question was, so you're using the MACD. Which time frames do you specifically find the most value out of it? Whether it's, yeah, I mean, since
Daily.
you're talking about daily and that's
Daily.
it.
That's it. Daily.
Okay.
I turn on MACD at the close, 10 minutes, 30 minutes. Let's say I'll start looking at it at 3 o'clock. I'll flip on the indicator. So I will start saying, where is MACD right now on the overall grand scheme of it all? I'll start looking at the monthly, at the weekly, and at the daily. At the daily, at the end of the day, if MACD crossed over signal and I have confirmation on RSI and my daily SMAs, and we've closed above a level that price is looking to push further up, I will wait till the end of the day, the next day, okay, to get confirmation that we are going to trend up, and that the next day is not going to be the pullback day, right? And if I get in the morning, then it becomes a pullback day, right? So I want to wait till the end of the day, that when I get that signal, that MACD cross signal, I want to wait. I want to wait till the end of the day, even if let's just say XOM broke out and it went to 112. I don't care. I'll take the 120s for further out. I don't care. But I want to get confirmation after signal that the next day is not going to be a pullback day at the open. I cannot tell you how many times you'll see this setup, okay, which looks so juicy. I hate saying that word. And then you have this the next day, a red candle coming down here. right? Right at the open, because you wanted to take longs right at the open because it was going to break out. You want to be in it. You want to be in it. It's going to go to 115. Then you have a down day, and then you took the long, you took the loss, and then the next day it does that. So wait till the end of the day after the MACD shows a signal breakout.
Cool. Check your phone. Meanwhile, I get to the next questions. All right. Let's see. Oh, this is a good question because I was actually looking at meta calls earlier. So when you get a chance, JP, for MACD, how would it be used for a swing trade? For we'll just focus on meta because I was looking at meta earlier as for an example to hold for a few days. So if you could look at meta and on the daily chart, because this is actually a really good question because I was actually looking at the meta's 30-minute chart and I really liked the candle it had near close. So I know you just for a second, if you could go to the 30-minute JP, just so I could show you what I was looking at. So if you, I don't know if the MACD will show anything here because you like it on the
Yeah.
daily, but if you like zoom into 30-minute, you'll see like what I was looking at. So kind of bounce off of the previous high, and it's also creating a possible breakout of that trend line. You can say it's a descending triangle, but you know, majority of the times bearish patterns work less compared to bullish patterns. So this is a good question because I ended up not taking meta. I personally didn't like how that 30-minute candle closed, but I still like the setup overall. So if you could go to whatever time frame you like the daily and is seeing what the MACD shows in terms of is that a good trade for calls or is this something that's going to be short lived?
Well, we all know that you can live in overbought territory for eternity, right? And as you can see, Meta has been overbought since January 27th. I personally don't like this. I don't like that the momentum of the underline is slowing down on MACD on the daily. Now, what I think you should wait for is, again, I don't know how eager you are to get into this trade, but for me, it looks like it has a little bit, it needs to breathe. And you can tell here that it needs to breathe because of the histogram on the MACD. Now, Meta is a unique animal, right? It's odd, like pandas. We don't know why they exist. What's their purpose, right? Other than looking cute. Meta can do whatever it wants. But for me, I personally wouldn't want to be long up here, and much the less when I'm starting to see the histogram lose momentum towards the bullish side. But again, what do I know? Look at this. Look at this wick on off that 711. That's funny because it's you. um, that to me, even though it's a red candle, that's a strong wick off that 711. So guess what? What is Meta gonna do? I don't know. I would like to see Meta come back down, touch that 711, and then bounce and then make a move to the upside and see what MACD and RSI do. But Meta is its own phenomena, so I don't know. On a 30-minute, I could see what you were trying to take. I mean, you could see that as clear as day. But why? As much as I would want to take this breakout, we've rejected off that trend line 1, 2, 3, 4, 5,
Yep.
basically 6 times. So it's having a hard time getting above that. And you know what they say: if you knock on the door 3 times and it doesn't break through, they're walking away, right?
Yeah, I mean that's exactly the reason why I didn't end up taking it. Even though it still looks great, there's still the risk of it not working. Um, so next question. So MACD, I mean you kind of summed this up. So MACD can be best used as a secondary confirmation for swing trades.
Yes.
Okay.
Yes. 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 Big time. Big time secondary trade. For example, today, Kevin, you took Carnival Cruise Lines, right?
Yes, puts.
Okay. When we were talking about Carnival Cruise Lines, I was like, wait 1 second. I had a 27, 26 level that my alert didn't go off. But the minute that you were talking about that and I saw this, RSI had already broken and I got this MACD cross on the daily and pushing to the downside, I was like, that's it, I'm in. You know what I mean? This is a perfect example of, as XOM is to me a perfect bullish setup with these indicators, this is a perfect bearish setup for me using these indicators. Maybe it works, maybe it doesn't. But this would give me the confidence to get into that trade. Now, I wouldn't be surprised. Yeah, there it is. You know, we've broken down below two major daily SMAs, and it looks like it wants to break below the 50. And if that happens, then you have a straight shot down to the 100. And if that breaks, then you're going to the 200. Obviously, there's levels in between, right? Obviously, 2330. But if you're looking at a longer duration trade, this is where these SMAs come into play, the dailies. And this is where you get the confluence of, am I in a risky short or am I in a much more relaxing short because I have multiple confirmations? Does that make any sense?
Yeah, absolutely.
Yeah. So there's whatever it is that you saw, because I know you don't use MACD or RSI, and I know you sure as hell don't use moving averages. Whatever it is that you saw in this trade
Yeah.
was confirmed by these indicators.
Um, what I saw actually was if you go to the 30-minute,
Yeah. This
you'll see an
disaster.
H pattern.
Yeah.
Yeah, that's what it was.
Bart's in some hair here, and then Homer.
Yeah, no,
Yeah.
exactly, man. And you also had a rejection of the level. Where was it? It was, I posted it. Let me see. It was the previous low. So, let me go to my channel.
What, 2675?
Yeah, 2654. I rejected 2654 in the 30-minute. 54.
Okay.
54.
I mean,
Yeah, right there. So that's
yeah,
where I just saw reject. All
okay.
right, let me
I mean, it was
see.
a bearish trade since Friday. You see it broke down below the 10 here on the
Yeah,
daily, and just took a poop. I'm even going to go as far as to say that if I was to put up the weekly pivots, yeah, look at that. Look at how clean you rejected today off the weekly pivot structure. Look at that. And we stopped at S1. And remember when we talked about how pivot structures work? Look at how perfect this is. You can't make it up, huh?
no, you really can't. I mean,
It's so fun.
if you guys haven't watched the pivot video, you should. It's not a long one as well. I mean, the greatest thing about pivot points is mathematical levels. I'm Indian, so I'm always going to advocate for anything that has math. But the thing about not indicators, that algos that suck, that give you levels, is they print and reprint. Meaning, it could show a level or it could show a signal or something, and then while that candle's open, it can actually that thing can disappear. Or for example, the algos would just give you a level, but then it'll keep on changing over time. The pivot points, if you haven't watched the video, the great thing about them is they print the second the market opens. So those are levels that just stay on there, and you could do so much back testing because you can go back, last week, whenever, a few months ago, and you could actually see the reaction to pivot points, and you could possibly create a whole strategy around that. So definitely check that video out on our YouTube channel. And our YouTube channel, again, since all people always ask, it's in the links channel that's above, so you can check that out.
So
Yeah, go ahead.
talking just really quick because, you know, in hindsight, you also took CVS today, right?
I did.
And
Yeah.
so we did it. Yeah, I know you didn't know about earnings, but it's fine
Yeah.
because here's the funny part. Even though, remember how we always said that RSI has a tendency to always be ahead of MACD? We can see that RSI on this is starting to show just a tiny bit of momentum to the upside, right? You can even clearly see where RSI just died up here, right in the 75 to 76 range. But I think that this is I think that off the smaller time frames, because remember the smaller time frames bleed into the bigger time frames, right? You can see that the smaller time frames are starting to flip bullish. The 130 minute, I bet you the 65 was already bullish. Yeah, the 65-minute was already bullish, right? Let's look at the 4 hour. 4 hour is getting bullish, right? And the 8 hour, which is the same thing as the 1 hour, as the daily, it is what it is. But I think that tomorrow CVS could actually get a momentum pop, right? Because of earnings, and we could actually get some decent profit off of this. But again, this is just this is a I mean listen, I have Carnival Cruise Lines on my most traded watch list. I moved it over from the master list, but this is an A plus setup. Yeah, it is an A
You're talking
plus
about
setup.
for calls.
No, I'm talking about Carnival for CVS right now. I
Yeah.
mean, I don't know what's going to happen because of earnings, but the smaller time frames are bleeding into the bigger time frame. So you can see that the 130, the 65, and the 130 are all starting to get bullish. That's a beautiful 30-minute candle close.
Yeah,
It really is.
that's what I
I
liked
mean,
about it.
if we can get above this, it's a clear shot to right here, and we get into that zone. You know, but the Carnival Cruise Line trade, people always say, "Oh, well, look, the RSI is oversold or MACD is RSI is oversold, MACD is under zero." But who cares about the smaller time frames? This is a week. This is what is it? 2 week trade out. It's 2 weeks, right?
Yeah.
Okay,
Hold on. Wait, yeah, go on. Keep talking.
it's whatever it is. It's 2 3 weeks. How can you not feel confident in being in this short or in these puts when you're getting a signal on MACD, signal on RSI, and you broke below major daily SMAs. It's
220.
it's yeah, it's a
Yeah,
it's a
it's
good trade.
3 weeks. Yeah, I mean, for CVS, I know a lot of people were asking about CVS. I guess CCL was a lot more easier to see. But CVS is, it was just a 30-minute chart. There was a bearish channel, and eventually bearish channels, get broken out to the upside. It's just a more question of, when do you enter and what's your purpose of the trade. So, this purpose of the trade, JP, if you could actually go to CVS for a sec. If you could go to the 30-minute. So you could see like there's the top of the channel. So if you just zoom out a little bit from that recent top, yeah, you could see like there's the top of the channel whether you draw a trend line or not. Um, we're essentially at the bottom of the range of that channel. So I wanted to take these calls because you could see it has one of my favorite patterns with it, which is the ascending scallop. I always say that the reason I like this pattern is not just because it sounds wonky, but because it's one of the purest forms of price action that you can read. I've always advocated for the fact that bullish setups that have curves and have accumulation of buyers are the ones that typically have a momentum to the upside because you have time for buyers to creep in and for buyers to show strength, right? Similar to that level that JP was talking about, I think it lines up to one of his moving averages. The first, I mean, I would love if CVS goes up to 55.25. That's what I was looking at. Um, the only reason why I was disappointed by the fact that it has earnings is not because it reduces my confidence of the trade. It's more the fact that we got into a high IV contract, and if there is for some reason or reason that CVS is down tomorrow, the loss is not going to be gigantic, but it is going to be bigger than, let's say, a trade that did not involve earnings. And if this does gap up, it could potentially benefit us as long as the momentum is strong. So it can't just be a small gap up. It does have to technically be a little bigger one. So that's why I had the target of example 55.25, which was the previous low that I broke below on the 30-minute chart. Yeah.
I wanted to take this trade today.
Which one? Oh, yeah.
Schlumberger off that daily.
Yep.
I think the entire energy sector is trying to, I mean, there's reasons for it, but it's trying to get some momentum back on it. But you know, for those of you that have been here for a while, uh, look at Lambridge up 12% today. Jesus Christ. Incredible, huh?
Yep.
Incredible. And to think
Um,
we had the stock at 50, well, what do you have it at 50, 54? Yeah.
Yeah, 55, 54. You got in earlier
Oh,
than me, and then you
yeah.
got, yeah, I got a little bit later entry.
I got out at 69. Yeah.
Of course you did. Actually, Ty, I
Ah,
think you explained this pretty good. I can explain it as well, but I think I would rather you explain it. Someone asked, make this very simple. Someone asked, does the move happen first on the smaller time frame or on the higher one?
of course, well, yeah. I mean, the remember, guys, the smaller time frames build into the bigger time frames. So the smaller time frames start. The 1 minute shows you eventually what the 5 minutes going to look like. The 5 minutes shows you what the 15 minutes going to look like. The 30, and so on and so forth. Right. So obviously, for you to get a full daily candle, the entire day has to be done. So if you're going to have bullish momentum on a continuation pattern, that means that all the smaller time frames have indicated to you that you're having bullish momentum, of course, right? That's why I'm not a big advocate of people trading on the 1 minute in any capacity. And for that matter, I mean, I've even become an anti 5 minute guy. I'm mostly trading off the 15 and the 30, because I don't like taking a trade in the first 5 minutes of the market open. I don't like the first 15 minutes because we might have data, and the 30-minute candle at 10 o'clock. Of course, we still have that extra, piece of data that might come out. So yeah, I mean, if you guys are starting to look for trades and you want to use MACD to your advantage, I would start at the 30, then look at the 65, and then, or for that matter, the 1 hour, the 2 hour, the 4 hour, and see what it's showing you, and then go from there. One of the things that Kevin is a big advocate of is not taking a swing trade until the end of the day, the last 10, 15 minutes. To get a better idea of what that 30-minute candle looks like, right? Because a lot can change in the last couple of minutes. So remember, as I said before, and I'll say it again, the trend is your friend. If the daily trend is bullish and you want to get into the trade, wait for confirmation, wait for a retest, take some long dated calls or puts, whatever direction it is that the trade is going, and let the trade build and develop itself. Don't be the person that's in a swing trade looking at the 5 minute chart, and because it goes down and you're down 25%, oh my God, the trade's going to close. I'm freaking out. Because if that's how you're going to act, then why are you swing trading? Right? Swing trades are made to have volatility. It's a matter of, am I in the right direction of the trade and the overall grand scheme of it all, right? How many times has anyone taken a swing trade and been looking at the 5 minute candle and you're freaking out because it does this just to later then do this, right? But if you were looking at the 30-minute candle, maybe you wouldn't have been so scared because you would have seen that there was a wick down here. You wouldn't have freaked out, and you would have been like, okay, I got support down here, and then it made a move to the upside. So, yeah, I keep all of my swing trades on one chart, and I always have them on the 30-minute. And I will not exit the position unless I'm heavily in profit until the first 30-minute candle closes. Because a lot can happen in here, just like a lot can happen in here, right? But remember, you're in a swing trade, so let it work.
Um, the funny thing was actually Palantir, if I had enough time, was actually going to be my third swing. I was going to get into Palantir calls. That 30-minute setup was just too nice, and
Right.
I think we have a
I don't
move.
like trading stuff that's at all-time highs like this. It's not my cup of tea. Like when I look at this, it's. I know it's wrong for me to not take trades when they go to all-time highs because they can keep going and going and going and going and going. And I mean, this is where you have to start drawing fib levels or even pivot structures to find out what's the upside trajectory of this, right? And
Mhm.
you take the measured move from the swing low to swing high, and then see what the 50% of that is, and then measure it again. It's a lot of work, but I mean, this looks great.
Fib
You
extensions,
know,
bro.
yeah, this looks great. This really looks great. I mean,
It,
there's another. Where is it? I mean, I was seeing this today too. I was keeping my eye on it. on micro strategies. And I wanted to see if we were going to break and close above the 10-day because I thought if we could get that 30-minute candle push above this 337, I thought in my opinion, 350 was a blink of an eye, right? But we couldn't do it yet. But I'm keeping my eye on this too. On the daily, it's starting to maybe give you a little bit of a signal. I mean, I really like that 65-minute, but this is just such a big barrier here. So I want to see what happens when we break above this, somewhere above there, and then look at what the hell was I talking about?
Barrier.
Yeah, see if we break above this barrier and take longs to here.
Yeah. What was I gonna say for Palantir? Actually, I mean, I've always advocated for fib extensions. I think they show very accurate levels, in my experience. And I personally saw, like, one level, the last level for its more parabolic move that it has to hit is 124.78. So that's pretty crazy if it surpasses 120 and it reaches all the way there. But
What did you say the number was?
124.78.
125.28.
Oh, that's crazy. It's just $1, almost a dollar more. Yeah. Um,
Let me actually look at the daily. 124.64.
it's it's funny
Yeah.
how math works
You,
out.
you do it the hard way. I'll just use pivot structures.
Yeah, absolutely, bro. To each their own. This is you guys could wrap up with your final questions because I guess we finished up with the questions of the MACD. Um, I guess this is a question more for you. What percentage do you put stop loss on swing trades for you personally?
Oh, I really that's I'm not gonna lie to you guys. Like the past couple of weeks, I've been a little bit hesitant with the market because it's so erratic. Um, I've been keeping my stops really tight, even on the swings, like 25%, and on some of them even 20%. I'm not in a position right now to be giving money up. And I like my swings to start, you know, really I like my trades to work right off the bat, which is not a great thing to say, because sometimes you need trades to develop. Um, but yeah, I've been keeping my stops really tight. I was in some swings that were like 40, 50, maybe even 60 days out. And, the minute I took them, they were up like 10, 15%. The next day they were down 30. And then I just watched them slowly bleed to like 40, 50. I averaged down. I was able to close them for like 20, 25% loss. But I really don't like being in a position. Most of my trades, my average position size, dollar amount, which I have no problem sharing, is I like to not be in more than $500 to $600 on a swing, which is not a lot of money, but it is a lot of money to a lot of people. Because if I'm down 20% on a swing on $500, I don't feel so bad because it's $100 that I'm losing. You know what I mean? But how much did that stock go down for me to be down 20%? You know what I mean? And when I mean 20%, it went down 20%, not because of BS spreads. I mean, it like you bought it at a dollar and now it's at 50 cents, something like that. Because yeah, but yeah, I'm keeping my stops tight, especially now because the orange man, uh, who I adore, at any time can say anything, right? And you just don't want to be on the wrong side of that trade at all. That's why I'm also trading stuff that I'm trying to avoid trading things that can be affected by anything that's said by anyone in government right now, right? So, I mean, I was at the gym, right? And I'm watching CNBC, and apparently somebody's got bird flu. And now everyone's saying, "Oh, we have our second reported case of bird flu, and the person is in containment." And, da, 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 da. And I'm immediately thinking, "Oh my God, we took CVS and they're talking about bird flu." You know, so yeah, I'm just keeping it tight. That's all I can say.
One thing that you actually said that I have to disagree with you on, that I think you're actually doing good or right, is you said that you shouldn't be expecting for swings to work out the next day. And I think, you expecting that is not something wrong. Because realistically, allowing or waiting for trades or swings to work out, you need one, you need time, and two, you need to be closer in the money. And sometimes that's not
Yes.
available to a lot of people because obviously the
Yeah.
premiums for deeper in the money or farther out expirations are, they're just too unaffordable. So I mean, I think what you're doing personally is not too bad, because then what you're doing is you're trying to focus yourself into finding good setups and good entry points instead of thinking, hey, this looks like it's going to eventually break out on the daily, and then take a trade that you can't afford to take and then be stuck in it and be stuck in red and stuff like that. I mean, each person has their own preference, but I personally want to say, because I know some people might be doing the same thing as you, I wouldn't necessarily think, in my opinion, that that's the wrong thing, because sometimes, you know, making sure your entry is good enough to where the expectation is where you think that the trade will work out, and let's say the next day or the day after that, would allow you to be a little bit more stricter in the parameters you would need to enter into a swing trade. So, yeah.
Yeah, I mean, it's nobody wants to lose money. You know what I mean? So, y- like we've always said, when you take an option trade, assume that it's going to go to zero, right? I, I don't really like thinking that way. I don't like assuming that it's going to go to zero. Or like, oh, trade with money that you can lose. I don't like that mentality. I really don't. I think it's detrimental to the trader, because if there's a great setup and you go into it with that mindset, then you're like, I'm not going to put on any weight, because if I put on too much weight, then I could get burnt and lose it all. And then you wake up the next day and that trade that you wanted so badly actually would have been perfectly executed, um, broke out, and you didn't make the amount of money that you could have made. But for me, because of my situation, you know, I don't like losing 250, $300. I don't like losing that kind of money. You know, I I always I always look at it like this. If I'm in a swing trade and I'm up 50% on the trade, let's say within 2 days, that's $250. Okay. How long did it take me to make that $250? Okay, it took me, let's say, 2 days, that's 8 hours, that's 16 hours, you know, that's 16 hours of quote unquote work, right? Um, but you made $250 on a trade. There are people that are working that are making $15 an hour, that it takes them 2 to 3 days of actual hard labor to make $250. See what I'm saying? So it's like, why would you not be happy with that? So it's the same thing, like when you're down $250 on a trade, or maybe 300 or 400. I look at it from the point of view of like, how much manual labor that I have to do to make that money back. If that makes any sense.
Yeah, no, definitely. I get that perspective.
It's like the same thing that I'll be like, oh, I only made $300 today. How long were you on the computer for? Oh, I was only there for like 45 minutes, and then I had to go, I had to go to the bank. So you traded for 45 minutes and you made $300. Okay. The average um the average business banker at JP Morgan Chase, confirmed because I know, makes $32.50 an hour times 8 equals $260. So some douchebag who probably hates his job sat there for 8 hours listening to people complain, tell them how miserable they are. listening to everything and anything that he doesn't want to be listening to for 8 hours to make $260, and you made $300 in 45 minutes. Like, what is like? How insane is that? You know, that's what I don't understand about a lot of people that trade. You know, even people that like, you take a SPY call, you take three contracts. Let's just give you an example. You take a $250 position on it, and it goes up 30%, or let's just go say it goes up 50%. You made $125, and you made that in a blink of an eye. It's like, oh man, I only made $125 on that trade. That's a lot of money. That literally is a lot of money, you know? So that's why I say, like, if your trade is going against you and you're in a swing, I'd rather cut my loser quick, right, than bleed out. Because here's the funny part: if you stop the bleed fast, you still have dry powder left to try to make it back, right? As opposed to if
People
you're
don't
in
know
a
what that
swing and
dry
you're down
powder
50,
is.
50%, you're done.
Explain what dry powder is, because people might not know what that
Dry
means.
powder means available cash.
Yeah.
For example, today, Walmart. We cut Walmart at 18, 20% loss, right?
Sorry, say that again.
Like, for example, the Walmart trade that we took,
Oh
right?
yeah, I got out at negative 18%.
Yeah, I got out at negative 17, Well, it's a swing trade, Why didn't we hold it longer? Because it got invalidated, dude. It got completely
Mm.
invalidated. Oh, but it has 2 weeks to go. It got invalidated. I'm out. I'm out. I'm not going to sit around there and have hopium. Last time I had hopium, I was in a toxic relationship with a German girl.
Oh my! I don't know how you still. Okay. Um. Bishop, just curious, what's your dollar amount on live trades typically? I don't share that information, but you could always refer to my how I trade document to get a sample or an example on sizing when it comes to light and all those phrases. Um, so back, that was all for me. So, yeah, I live under a rock, bro, so I don't know what DB means, but yeah.
DB, Deutsche Bank.
No, dude, someone said DB.
Oh,
Not the actual Deutsche Bank, but yeah, you guys can go ahead, put your final thoughts, questions, or remarks, and then after that, we can maybe end up wrapping it up. Again, I'll make this announcement on here since a lot of you guys are on. I do not sell services that allow you to copy trade. First of all, that's frowned upon, especially for stocks and options. So that itself, if anybody's offering you that, you gotta like think 3 steps, because the stock that's kind of wrong. Crypto is different, but options and stocks, you definitely don't want to do that. And I definitely do not accept payments in crypto. I don't even use crypto, right? So yeah, just keep an eye out. I only have one account. It's the one that's speaking right now. I only have named this backup stream, so you guys are viewing JP stream majority. But yeah, so since
does anybody
we
have any questions? Does anybody want to rant about something that they despise about trading? And we'll end it with that.
I think that's pretty much it.
Pretty much it.
Yeah.
Well,
Um,
losing money.
yeah, losing money.
Uh,
For those who, yeah, I hate when people pump stocks too. But for those who don't or are new, I have a resources channel. It's maybe a good idea to check this out because I wrote all of this. Took a while to write this. It's just something that you could possibly read to get a perspective on what your potential risk strategy is. Again, this is, I mean, it's in the same servers, so it's all free. So why not take 2 minutes to read it? Even if you've been trading for 4 years or if you've been trading for 4 days, it's just always great to have something that jogs your brain into thinking about things that you maybe thought about and you kind of shoved away or you haven't even thought about in the first place.